Hello, welcome to today's analysis of the NQ and a little bit of related markets. It is Monday, the 17th of February. So let's take a quick look at what they did last week, and what I see today. So last week I was talking about them coming up into this 12-hour OB. I've been talking about this for a long time, actually. And they've done that. I was saying there was downside potential, but after we got these breaks of structure upwards internally, and after it shifted focus to this guy, this bullish EOS here, it seemed like it was the most likely thing to happen. Let's see, we'll call this an unproven BOS here. Now, what pulls are we in? Well, we still have this all-time high pull, but FX and other regular brokers and exchanges have taken the all-time high. It's very messy, this one, which is interesting, notable. CME is still in this block. Oh my god, what's happening? And honestly, I feel like we could get some bearish signs, some bearish results from this block, taking liquidity deeper into this area of naked point of control and stuff. But because this market's already taken the high, and we have equal enough highs here, I mean, if I'm just going to play the CME itself, I feel like we could get a bearish reaction from this zone. We have confluence here. We have anchored VWAPs. It is still in the bearish pull that created the change of character technically. And we can come fairly deep up into it. But I really need to see a violent reaction from inside of this block if I'm going to be considering it still valid enough to bring us deeper into structure. Now we still have this zone down here, which I like for the future. But getting a lot of closes above the all-time high, consistent bearish or consistent bullish structure, probably not like that, but taking liquidity down, building structure here, like proper accumulation up here above these highs, I would be thinking that we could just keep breaking to the upside, really. But we're still in this block. I'm not going to let the traditional exchanges really change my mind much on what I'm looking at, because I just follow the CME, honestly. The CME, it's always done me well. And if we look at the normal exchanges, the 12-hour, we have money flow divergences, but no wave divergences. Let's have a look at the 4-hour loads. We have a wave div, no money flow div. The 30-minute. It's seeming like we want to push higher on the normal markets, but I think we could get a pullback, and if anything, it's just going to give us a chance to long, right? So what do we see immediately? Well, I took a long here. I know it's a late video today, but I took this long. and I exited, yeah, here. So it's not bad. I mean, that naked point of control up here, 22,300, that's target for the CME. But things are a bit mixed for what we're going after at the moment. And things aren't just mixed because the stock market is showing mixed. Like, if we look at the yen pushed up, and as it was pushing up, the stock market was also pushing up at the same time. And money was coming out of the dollar. Money was also coming out of gold and the bonds. So the yen and tech stocks were moving up at the same time, which is kind of interesting. In my opinion, we have to wait and see whether it's them selling the yen and hitting higher offers on the yen before the stock market shoots, or if the yen's break of structure is genuine and the stock market is hitting offers before a heavy pullback. But at this stage, it's very difficult to tell because they were both moving together and money was flowing out of other markets into both of them. So to me, it's neither risk on nor risk off. It's at the moment, well, obviously it is one of them, but I can't tell at the moment. So I'm going to wait and see for them to diverge, basically. ES is interesting because it's trapped in it's really like it's up at the highs, man. It's not breaking the same way the NQ is, which is also rather interesting. We see the ES push up a bit and then start breaking huge structure down. That would be interesting, but seems like the top side could be something that could be hit relatively soon. We can still come up, make a new all-time high, and then come back, of course. But my previous kind of daily to weekly analysis of the bearish pulls, they're starting to erode a small bit. That's okay. I mean, I'm not tied to one narrative. My outlook on the markets will change based on the data that I'm given. And I think that's how it should be. So immediately we have Japan's lows. We have, give me Australia. We have Aussie low here. We're coming into a holiday for US. And that can mean a couple of things. It can mean nothing much happens, or it can mean kind of liquidity gravity wells. As in it price just sinks and gets pulled to liquidity rich areas. I'm partial to thinking it might actually move down. But also we do have this target up here that there's a chance that we could come, maybe not from right there, but we could come deeper into this block. This is a very large block. There's a lot of room for distribution up here. And our nested liquidity points within this block are still not hit in my eyes, which is crazy because, well, on the CME, but like on normal markets, we've taken the high, but we still have yet to interact with important points within this block, in my opinion, and in my view. So until that happens, I'm just going to play the CME, guys. That's what I do. So it's a bit mixed at the moment. We took the high. We're still technically in a macro-ish bearish change of character on the CME, but we took the high on other exchanges. Yen is moving up at the same time as tech stocks. We don't know what's happening there yet, in my opinion. We have to wait until one shows us a different sign than the other. and then watch where money is going between out of the dollar or into the dollar or into safe havens or yeah, gold. Gold's interesting because I feel like the structure they've made here actually lends itself to one more cycle up to then distribute properly. But we'll have to see. Yeah, markets seem a bit paused at the moment, in my opinion. So we'll have to just see. We do have nice liquidity built from last week down here. And as always, we were able to come down pretty far and maintain our narrative. And if we did, the range that we could occupy would be huge. It would be rather large. A few $100s of a range. Because of the implications of structure that we've done and how we've done it. We just kind of push straight up so we can pull straight down and then, we can base out properly. Yeah, I have targets to the upside, targets to the downside at the moment. Large enough imbalances from Friday. Maybe thinner liquidity on US might balance some things. We'll have to see. Yeah, that's it really. It's a bit late today, so I'm not very confident with giving potential trade setups for US, but as I see it, if they come up first into 22,303, we get a very violent, proper sell signs. Breaks whatever you trade for a good sell sign. I would not be against shorting into structure. If we come down first, I would be a bit more cautious about taking highs. If we come down first, we can spend a lot of time coming down and go nowhere and let positions accumulate. If we come up first, it seems to me like they would be hitting offers aggressively and that we could see a more violent pullback. So that's my guess. They hit my area and I took a long and I'm kind of done now. It was very nice looking for value gap. Immediately, this little consolidation here, I like it. Getting closes below 22,150 and breaking down more would be not great. That would be nice to hold. It'd be nice to hold that, but they can't come lower. But it would be nice to see Friday's areas hold. But I would not be surprised as well if they did a big. Yeah. Just play what's given. We have. Sorry, I didn't mark this. We also have Tokyo high here, so we're still trapped between Asian high and lows. It's rather interesting. Yeah. That's it really for me, guys. We're in the area that I was waiting for a while, and now I'm going to be very reserved and wait. But until we break this block, I may be more partial to taking shorts, depending on what I see. Yeah, I'm gonna be paying attention to other markets as well. So that's it. That's it, guys. Be careful this week. If the hype develops, don't let it take over. You know, you'll look at the news and the news will say so many things, and just don't even bother. Just read the charts, guys. I don't think the news is good, especially not like trading view news and stuff. Like, I mean, I'm not talking about data releases. I'm talking about little articles posted by random financial, quote unquote, financial websites and stuff. Just read the charts, you know, just stick to the charts, guys. If we do want to stay in this range, this little zone down here could provide something, but at this stage now, I don't know if it's going to last because it's full of Asian liquidity. So we could come down lower. 22,145. That's a bit of a level to watch, I think. Might get a scalp off that or something. But also be careful if you're trading on a day that's a US holiday. It can be rather unpredictable. All right, peace, guys. Happy trading, and we'll catch you tomorrow.